For more on tonight's hearing, let's bring DeWardrick McNeal, Senior Policy Analyst at Longview Global and a CNBC contributor. DeWardrick, great to have you with us. It's a bipartisan issue being anti-China at this point, so it does seem like the rhetoric, the seeds are in place, they're planted. This would be the time for some sort of anti-China legislation to be passed, and yet Congress is Congress, DeWardrick. So how should we look at this in terms of whether something will actually be done?
It's a good question, Melissa. I've been up here on the Hill all day today trying to get a sense of the mood. And I'll tell you, the mood is a bipartisan focus on competition and trying to really lay out the litany of irritants in the relationship. But also, Melissa, a real focus on trying to figure out where the weaknesses lie. And then, to your point, to try and put together some sort of legislation to address those weaknesses. But again, to your point, Congress is Congress. It is fair to point out that we have a Republican-controlled House, a Democratic-controlled Senate, and the Senate can go its own way, and the president has his veto pen. But I will say that the House seems to have its pulse on the American people's opinion about China, which is increasingly negative. And so I think you'll see a lot of issues tonight that's raised that you will find a lot of agreement out in America, outside the Beltway, on trying to do something about the threat that China poses. But I do think Congress will, this committee in particular, will focus on weaknesses. And Melissa, they think that the business community may be one of those weak links.
Just to specifically drill down on TikTok, though, DeWardrick, I mean, the American people may be anti-China in terms of, competitive threat, et cetera, but they love TikTok and they don't want to give that up. So how do you think, Congress perceives that as a priority when it comes to where they can limit our interactions or limit investments, et cetera?
Yeah, that's a good question. TikTok was in almost every conversation that I had today. And, Melissa, we have some history of when Washington gets zeroed in on a Chinese company. Huawei 5-6 years ago was that company. Something eventually ends up happening. And I don't know if this is the round to do it, but I do expect that at some point, whether it's a limited ban or a federal ban, nationwide ban, something will get done on TikTok. But I did hear an interesting thought today, and that is there are some people who don't want to see us target Chinese companies specifically, but rather take a look at actions that we dislike and focus there. Otherwise, you end up in a whack-a-mole situation where it's Huawei, TikTok, and something else the next time around. So a real focus on the actions that we dislike and going after that with policy solutions.
DeWardrick, it's Tim. This is a concept of exploring strategic competitive landscape. And I get the sense that on this side, we often think that we don't have any strategic competition from China. Our tech companies are the biggest in the world. We obviously know in the chip space that may not be the case. Are you picking up on any dialogue that really this is an opportunity for the U.S. to actually better determine where strategically we might need to do more to compete against China? It's not just about us dominating in their part of the world.
Yeah, I think that's a good point, Tim. I think a lot of people don't realize the degree to which China has its own companies in its market that's dominating, but also looking to compete with us in third markets. And a lot of that is tech related. I will note that today it didn't get much attention because of the hearing tonight, but the Commerce Department released the latest rules on what it would take for companies to get some of that CHIPS Act funding. And there are a lot of things that will limit companies from really doing business in China, expanding there for over a decade, joint research, licensing efforts. So you're seeing it really dial in. And I think this is going to continue to be the trend going forward, Tim.
DeWardrick, at the same time that this hearing is going on, there's also sort of this notion of poking the bear, trips to Taiwan and things like that that could provoke China. Is there any acknowledgement that what our actions also could be scrutinized and perceived as threats or sort of being disrespectful to China? And of course, our politicians will say they can't tell us what to do, and that is absolutely fair. But it's certainly not making the tensions any better between the two countries.
No, that's right, Melissa. And you raise a great point about what at some point will be a retaliatory measure from China. We know, we've seen this during the trade war. China will hit back. And it, again, and you've heard me say this on the show, it may not be symmetrical. It may be an asymmetrical hit back. But there's been a lot of things that we've been doing to really, as you would say, poke the bear. And at some point, you have to expect that there will be some retaliation from China, and that could come in many forms. But it is something that you don't hear discussed publicly a lot here in Washington, but behind closed doors, there are people who are aware that China can punch back and may.
Yeah, you know, Eduardo, we're also locked, the American people are in this battle with inflation here. And when you think about this, you've been following this arena for a very long time. Everything, this back and forth, is inflationary at a time where I think a lot of investors, at least here in the U.S., have gotten a little bit more comfortable in 2023 that inflation is in the rearview mirror. But all of a sudden, though, if we were going to have, you know, this deglobalization push and additional tariffs and the tit for tat with a lot of these companies, isn't that just as big a concern right now for U.S. citizens and consumers and investors?
I think it is. Unfortunately, I don't think a lot of people have really drilled down on this. Certainly the consumers have not. But look, I think when you start talking about decoupling, when you start talking about de-risking supply chains, there's still a lot of uncertainty around how all of this is going to land. And so, yeah, this absolutely could continue to have impacts on the economy as we try and fight inflation. Unfortunately, though, it's not really a discussion that we're seeing. At least I didn't hear much about this in the discussions that I had today, but it's a real concern.
Dewardrick, always great to get your perspective. Thank you.
Thank you, Melissa.
McNeal of Longview. Inflationary, I'm glad you brought that up, because just to bring it full circle here, it certainly doesn't help what the Fed is trying to combat.
It makes their job much more difficult. We've talked about it for a while. If, in fact, this is the case, this deglobalization, I mean, that's extraordinarily inflationary, which makes a very difficult job that much more difficult, which is one of the reasons I think the Federal Reserve has showed such resolve, and the rhetoric around their rate hikes has been what it's been for the last 9 months or so.
If you look at how we're trading some of these markets, too, I mean, Taiwan Semi, back in the third week of October, when we had those shows where we formed the bottom of China by just saying, is China uninvestable on this show? And in fact, it ripped. And if you look at the K-Web and if you look at Alibaba, first of all, Taiwan Semi went from a $63 stock to a $90-something stock, along with semiconductors, but really outperforming. Taiwan Semi will have political risk, attached to that investment story. And if you look at the K-Web, it's down 20% after being up 93, 94%. There's no question, although we've said, and I've said it, and I believe this, that EM is an allocation that I think is going to continue to pick up steam as long as the dollar stays weak. Dollar, by the way, has rallied 4% in the last 3 or 4 weeks, so it's really dented that trade. But you can't tell me Alibaba and K-Web stocks and Taiwan Semi aren't going to trade at a discount in this environment.
Yeah, Julie, do you think that we've sufficiently priced in the risk, the China risk exposure? China exposure risk, she tried to say, into some of these stocks?
No, I mean, I definitely don't think, I don't think anything is really priced into most of these stocks. Generally speaking, valuations are pretty rich and healthy when you think about just inflation, let alone any kind of geopolitical risk. And I think what people underestimate is how interwoven a lot of these companies' supply chains are. If there's any kind of friction, it really has a material impact, right? Think about how COVID impacted our supply chains and how that rippled through both of our economies. So I think they're pretty interdependent on each other, and we would love to be able to sit here and say, go USA, we don't need them, but we really do. And so I think thinking about businesses that have a lot of reliance or exposure to China, it's probably not reflected in valuations.